Hello guys, welcome back to the Temple FX YouTube channel. Today's video I'm going to be talking about how to scale down through the timeframes and which timeframes are the best to analyze on. So let's get straight into it. I'm on GBP CAD, so pound Canadian, and I always suggest to start on the daily time frame. Now, starting on the daily time frame has a number of benefits. One of them is you can see sort of recent price action, but you can also see a lot earlier price action. Now, how this benefits you is that you can mark your support and resistance levels. So I'm going to select my horizontal ray tool, and I'm going to look where the support is, or the resistance. So I've identified a level here. As you can see, tap, 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 tap. Little taps here. That is a level of support as well as resistance. I'll do another one. These lows here, so tap, 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 blah, blah, blah. Oh, a number one thing to do your support onto resistance is that you've got to treat them like areas rather than a line. So, like this part here, I could easily move this line up to the top of these wicks, so it sits better, but then it's not going to encounter this bit, is it? So always treating them as areas is very beneficial, because support and resistance should not be one of your main confluences on taking a trade, or you should not be trading just for support and resistance. People say you can do it, but I can tell you they are lying. So yeah, identify your support and resistance levels on that daily time frame. So we've got the lows, got in between, got the highs, blah blah. That is a good thing. So now we have our levels drawn out on the daily time frame. We can look at the more recent price action. Now I can see right here that there is a daily Fibonacci level in play. I'll mark that. Here we go. So from the wick to the bottom, and look, as you can see, it's rejected the 61.8 as well as the support and resistance level. This is where and why you treat it as an area, because look, it hasn't touched it to the pip, it's gone slightly over it, so on the lower time frames it would have closed above it, but on the daily, as you can see, it is working as how it should. Now, once you have done this, you can start looking for things like trend lines. So maybe it's something like that. Would then, before this recent price action here, you've been thinking, okay, maybe the 78.6 will be a good point for this price to come up to because of this big daily trend line. But once you've marked out what you think you can see is fine, then you want to move down to the 4 hour. Moving down to the 4 hour, this is when you want to really start focusing on the more recent stuff rather than the old stuff. You want to look to see if there's any more trend lines in play, or you can get a fib in play, a smaller fib. So yes, this blue line here is the overall 61.8. Green is the 78.6 and the purple is the 50. So it is coming up to retest. So you can be like, okay, I'll fib from this high to this low because price has stopped, and look, 61.8 tap on the lower time frame on the 4 hour fib, but this 61.8 is next to that daily 61.8, which then you can say is two different confluences because they're two different time frames. So you can say you've got a 4 hour fib and a daily fib, support and resistance, and a trend line. Like, you can multiple levels of your confluences. I just realized that I didn't have my EMA on, so again you can see the EMA on the daily time frame, which is down here. But yeah, in this case it doesn't really make a difference. But yeah, again on the 4 hour, the EMA can contribute to a confluence if in the right location. So now that we've worked out our 4 hour fib is in play as well as the daily fib, both bearish, which is a good sign, we can now move down for the 1 hour time frame. Now when you move down to the 1 hour time frame, everything starts getting a bit more messy because you've got a fairly big fib and then you've got an overall bigger fib on the daily. But now is when you can start looking at the smaller levels of structure, because all these smaller little patches of volume that are just built up within the daily and 4 hour time frames you do not see. So, but on the 1 hour, as you can see, it does have an effect because of these wicks and stuff. But you won't see that on the daily time frame. This is why it's important to start on the daily, 4 hour, 1 hour. And when you get to the 1 hour, you want to start thinking about where you'll be entering stop loss as well as a take profit. You could also put in a 1 hour fib if there's one in play. So we can say from here to the bottom, which is then left at 78.6. That 78.6 is in play. So now we've got 1 hour 78.6, 4 hour 50, and daily 61.8. Right? That's a lot of confluence, yeah? Now I will bring a video about counter trend trading and how you should do it and how you shouldn't do it. But in this case, all 3 time frames are bearish, which is a good sign. And that means that this trade is likely to head down towards this level here or even further. Okay, so after the 1 hour time frame, if you want to get a proper clinical entry, you can drop it down to the 30-minute or the 15-minute. Now remember, when you drop it down to the 15-minute, you're going to have a lot of price jumping because of how small the time frame is. However, this is by far the best time frame to get them exact pinpoint entries you want and tight stops and precise take profits. Anyway guys, that wraps up today's video on time frames and how to scale down using them to make more confidence for yourself and your trades. Make sure you leave a like, you leave a comment and you subscribe. If you want to leave a comment with any questions that you want to ask me, feel free. If you want to DM me directly, press my Instagram in the description. It's templefx _temple_fx_. And if you want to join the signals groups as well that I run, then the first 20 people that join are totally free. But after that, it is then £30 a month from the time of this recording video. Thanks for watching, people, and I'll see you in the next one.